I want to ask you just to give some best practices advice for VCs that look to raise from family offices.
What would be my advice? So I think the first thing definitely is know your LP. So get to know your LP and know what drives the LP to invest in a VC fund. I would also advise get to know them beyond fundraising, better before you start fundraising. So work on something together, whether it's a publication, a project, an event, a deal, share deals if they're also doing direct investments, because that's the best way of getting to know someone to work on a deal. Then
Before you go to the third, a good point here. Am I right in saying that because some GPs might think, well, how do I get a family office to want to do that? Am I right in saying that if you can't cross that boundary, the likelihood that you can get an investment is not very high either?
Probably I can't speak for all. It's different for every family, but I think it's definitely of an advantage if you can get to a family member or someone who works for the family in a setting that doesn't involve fundraising directly. I think if you start off with your pitch right away without any context, it'll be very hard unless you have some stellar, very unique thing here. And it brings me to my third point. We looked at 160 funds in the past 2 years, and we found it very hard oftentimes to find a USP. There are a lot of funds that seem quite similar, whether it's investment focus areas, geography, stage, why they think they can win. Then they say they have some core investments here and there, but it oftentimes felt very similar. So I think what is good is to have a really good USP. What makes you unique, whether it's your key or your connection to Unternehmertum, your proprietary accelerator program, or anything that you can offer, I think is important. And then last, I think it takes a very long time to prepare a fund or fundraising. I think I would really take the time to build up your team, your reputation, brand, track record. It takes time and money to do that, but I think in the end, then you'll be probably more successful with fundraising if you've thought about all these things for a little bit of a longer time. Because sometimes I see teams and think, why do they think in this fundraising environment that they can raise a fund? It's really tough, and there's so many funds out there. It's incredible. So maybe these 4 points. And for us, of course, a very good and solid impact and ESG framework is important. Also, we try to look closely at diversity as well, because we do have an issue in the venture scene when it comes to diversity as well. So yeah, these are the things.
Here's a few words from our beloved sponsor. Discover where operational expertise meets innovation. With end-to-end coverage across fund admin, tax, accounting, compliance, ESG, and more, we take care of the complexities so you can focus on what matters most. Whether it's supporting visionaries or maximizing returns for your LPs, our tech-driven and comprehensive solutions empower you to achieve your goals with confidence. Partner with ACE Alternatives to streamline your operations and elevate your fund success.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Miki, welcome to the European VC podcast.
Hello. Nice to be here.
I am so excited to bring you on because one of the very few times I have gotten an inbound to come on the podcast from a family office that wanted to talk about how they invest and the mission they're on in the space of venture and impact. So I'm excited to be having this conversation with you.
Yes, me too. Thank you for having me.
Miki, I told you just before we started that I want to start by just asking you a bit about yourself and the family behind Aurum Impact, and of course also the family office in totality, so to say. So maybe you'll start there. Tell us a bit about Aurum Impact and the Goldbeck family office.
Yes, happy to. So Aurum Impact is part of the family office of the Goldbeck family. And the Goldbecks they own a construction business started by their father, Otwin Goldbeck. And two brothers or two sons are now the co-CEOs of the construction business. And the third brother has a solar business, which they split off from the construction business a few years ago. So it's basically three brothers now and the parents. And they have a family office called Aurum, Latin, or also the word for gold. And Aurum has different entities investing in different kinds of asset classes. And Aurum Impact is the one where we invest in startups and funds that aim to have a positive financial return, but also a positive environmental or social return.
Let me start this conversation at then the question, why are you motivated to come on a podcast to talk as a family office? Because that's most do not want to.
That's a good question. So my background is in mainly in sustainability, let's say, sustainability and impact. I worked in consulting for a few years and then moved on to Unternehmertum, which is now Europe's largest entrepreneurship center. And at Unternehmertum, I learned a lot about venture capital and startups and how scaling works and all these things. And also realized that families in Germany actually hold a lot of wealth as well. And that families or family offices are increasingly interested in investing more in startups and becoming more active in the venture world, but do this very, very privately. And due to this, it's on the one side difficult for more families to get involved in the venture asset class because it's seemingly, I mean, it is very risky because the risk is high, because it's also something that is not very known or more foreign to them. And on the other side, it's very difficult for startups and funds to get in touch with families or family offices that invest in this asset class. When we started Aurum Impact, it was with the mission to invest in startups and funds, but also to drive change in the system in many different ways, where we see challenges in the system and in all these different layers, as we call it, in the ecosystem, from talents, startups, VCs, LPs, and the broader ecosystem. So we, as Aurum Impact, want to inspire more families and family offices to get active in the venture space and especially in impact investing. And that's why we want to get the word out.
And if we should just put some numbers to at least describe Aurum a bit from the perspective of where we often do, which is what investments have you done? Since launching in February 2023, you've invested directly in 6 startups. Paebbl, seven now. Things move quick. Paebbl, the Landbanking Group, Voltfang, Undo, CleanHub, and Cyclize. And then you've invested in 8 funds, some of them good friends of mine: Planet A, Systemiq, Revent, Breakthrough Energy Ventures, Counteract, and more.
Yes, and we're also in the process of signing 5 more right now.
Ooh, exciting. All impact as well?
All impact, yes.
So that means, since February 2023, that means you do 5-6 funds per year. Is that the aim?
Yes. So every year we want to invest in 4 to 5 impact funds and 4 to 5 new companies as well.
Some VCs understand family offices perfectly and how they're structured and what's important to consider. I'm sure it's a question you get by many. Some will ask it bluntly. Some will just try and get it out of you. I'll ask it completely bluntly here. How has the Goldbeck family office come to the decision that they want to do impact, and how have you then structured, so to say, the family office to allow you to do so? Meaning, do you invest out of one big balance sheet and or do you have money set aside, or how does this work?
The family office has invested in venture, so funds and also direct investments for a few years now, mainly driven by Hendrik Goldbeck, so one of the brothers. He's a person that is very open to new things, let's say open to explore things, but also very familiar with the venture scene, and has, I think, driven this largely, because I wasn't there yet, but from what I've heard, I think he was the main driver in investing more in funds and startups. I think the first impact funds came about, so around, I think, 2019, 2020. It was when Planet A started to form, the World Fund, ANU, and a few others in Germany. Hendrik was one of the first who also said, I want to invest in these funds as well and make it also a core pillar of my investment strategy in venture. He looked for someone, and that was the coincidence where I came in, who could build up this unit for him. And he and the family office, they established Aurum Impact as its own legal entity, and have decided then that they only want to invest in impact topics or construction related topics. Construction makes total sense from a strategic standpoint. And then the impact angle was also out of their sense of responsibility, that they were enormously lucky also in the past 20, let's say 50 years with the business that they've built up and with everything that they've accomplished and how they succeeded with the company, and wanted to give back some of their wealth also to things that they thought mattered to society and the planet.
Which is like, just to highlight a point here, a lot of the family office capital is very often, I call it patriotic capital or passion capital. It is, of course, to create returns, but it's also very often earmarked to either a specific geo or a specific vertical. Let me ask you, maybe on that part, do you have any specific remit in terms of only Europe or primarily Germany or anything along those lines?
We do have a strategy, but as with probably every family, we are also quite flexible, I would say, or I want to also us to be flexible. We've set our geographic target geographies, let's put it that way, as mainly Europe, of course, because we know the market best here. But we can also invest in US or any other market if there is a fit and if it makes sense somehow. The risk, of course, always increases with distance, or if you don't know the people, the culture, the language there. So having said that, I think if there is a good connection, if it makes sense, if it's a topic that makes sense, then we can, we're open to invest and we can invest there. As for topics, we have developed 4 core topics for our direct investments, which is climate and energy, circularity and materials, ecosystems, and 4th is social equity and stability. So we try to invest along these 4 themes for direct investments, and for funds, topic-wise, it's completely agnostic. So we try to diversify along topics, geographies, fund sizes, stages, and all these things, but are quite flexible there.
Agnostic within still the overarching goal of impact.
That is true. So every fund and every company too, they have to be able to show us that their mission is really driven by improving a specific social or environmental topic, let's say. So whether it's around water savings, CO2 emission reduction of plastic waste, can be different environmental or social KPIs.
Yeah. It's funny, Miki, because we are doing the European VC Awards every year. And this year we've added in the Impact Leader Award as well. Together with Better Society Capital, they're helping us judge it. And Google are sponsoring it, so thank you, Google Cloud, for that. But there we had this discussion. So when we focus on impact with this award, does it have to be an impact fund? Does it have to be an Article 9 fund or 8 fund? Does it have to be a climate fund? What we ended up deciding was that we wanted it to be open to anyone, so to say, so generalist across all spaces, with the first core criteria, stellar returns. And then after that, the impact that they have made on different, and it's both in terms of their internal practices to make sure that it's actually a good steward of capital and of the impact agenda, and then the impact they have made in the market, so to say, in terms of it could be carbon lowering emissions and so on. I'd love to hear how you think along those lines, because what we're saying is, as an example, a fund like Atomico are doing a lot on the impact agenda, but they're not an impact fund necessarily as such. So I'd love to hear how you think about that.
I think the word impact is quite unfortunate nowadays, because impact is everything that you do, or everything anyone does has an impact somehow, right? We mean, or what is meant with impact investing is always that you look for financial return alongside an environmental and social return. And I think maybe we need a new term or something, because of course other VCs that invest in AI or robotics or aerospace, they say we have a big impact. I say, of course, everyone has an impact. That's not what we're talking about. Not everything has to be impact investing in that sense for social environmental topics. We need other topics too, of course. It's tough for me that everyone is trying to use the word impact now. And I think I'm also thinking with the team, we need to move away from that term, because everyone says, no, I have impact. I want to have impact too. But we mean something different. It's two different things, essentially. Yeah.
Do you know the team at Better Society Capital?
Yes.
Yeah, very, very good friends. Okay, I want to go back to another question, just trying to map out how you come to your strategy and so on. So you've done 7 startup investments almost. You've done 8 funds with another one coming. I want to ask, another 5 coming. I want to ask you, how did you, as a family office, come to this split between direct and fund investments? And does the volume number here, the number of investments, also match the size of the checks? Meaning, is it also in dollar amounts, more or less 50-50?
How did we get to the split? I think that was different talks with the family officer or family office and the family itself on their preferences, and also my competencies and skills that I brought to the table. I didn't invest in funds before, but it was something that they definitely wanted to do and wanted to continue. So we decided to do it pragmatically, half-half. And naturally, tickets in funds have been and will be a little bit bigger and higher than in startups, because we also invest quite early. And for funds, fund sizes are just bigger, so it makes a little bit more sense to put bigger tickets in. For example, the Breakthrough Energy Fund is 1 billion, and if you come with 500K, it's a little bit difficult to get an investment there. But for startups, we can start as early as with 500K, but generally it's more 1 to 2 million, and for funds it can be from maybe 1 million to 10 million. Probably the medium is between 3 and 5, I'd say.
Yeah. And how do you think about the fund sizes and fund generations? And maybe here, let's remember that we have other family offices listening in. So maybe reflect a bit on the process of getting to this, the things you considered, and I have my perspective, right? But I'd love to hear you first say, this is how we looked at the venture market, and this is how we came up with our decision in terms of, we want to do this many emerging managers, we want to do this many established, we're not comfortable going too far away from Europe, those things.
Let's put direct investments aside for now, and let's only look at funds. I think for funds, it's easier to start with funds. I think if you're quite risk averse but want to get into venture, I think it's easier to start with funds. Of course, you have all these different aspects that you can check and track. For example, the track record, or also if it is a first time fund or not, and what kind of topics do they invest in, what kind of stage, and so forth. What I have tried is to find out what the family thinks and what is important for them, for one. So coming in as an external and trying to set this up. And then also to see, where do we have the most value add as a family office, and where can we also be brave and do something a little bit differently than traditional asset managers or big insurance companies or pension funds. For example, historically, first-time managers have higher returns than second, third, or fourth fund generations. But of course, it's more risky because you don't ever really know if the team can work together well, if they can show the returns, if they can get the best investment, and so forth. And it's very tough for them to get money. So I try also to always put emerging managers, first-time managers in the mix, where other people categorically exclude them. Then, for example, there are funds that have a really hard time raising. For example, now it's social topics, and it's very tough. You can say it's maybe not a good venture class, but also it is it is not non-venture, right? So it's something in between, and it's very tough for them to get money, but they're very good models that we do need, whether it's in the healthcare space or health tech, biotech, education, these topics where families are needed to step in to fill a gap where no one else is really able to put it in a drawer and say, it's this asset class, sort of, right? And same goes for like special target or special missions, like whether it's diversity or LGBTQ or other topics where funds have a specific angle or USP, where it's just tough to raise money from institutionals or more established asset managers. So it has to be a mix somehow. At the same time, of course, we need to analyze all the other metrics that everyone's also analyzing, with track record, with what the contracts look like and the waterfall, how money is distributed in the end, what their USP is, what their investment strategy is, the fund model and team setup, all these things, but that's natural.
It's incredibly interesting to hear, right? And there's so many points also for GPs listening in, because some families will be 100% focused on returns. They will not think at all the considerations you had just now given around which funds have a tough time raising in the market, what is needed from a societal perspective, and so on. And then a family can be on the completely opposite spectrum like you are. And that just underlines the importance of a GP listening first rather than talking first, because you're going to be receptive to a completely different pitch than someone else, and receptive to a completely different fund.
Yes, yeah, that is true. I think that's also my number one tip to GPs, that when they're raising, know who your LP is, because there are LPs who want the very arrogant founder pitch and focus on returns only. And then there's maybe families or private wealth owners who want a different story. They want to also maybe see deal flow or learn, or it can be very different motives. But if you don't know them, you start with your standard story, it's the worst thing I think you can do. But same for every startup, right? A startup also has to know the VC and know kind of what the VC is looking for. And it's not that we're not looking for returns. I think it's a good mix, and it has to be a diversified portfolio, I think, across the different funds that we invest in.
One of the motivations, or actually the prime motivation for you to want to come on the podcast, is you want to motivate other families to do the same and get into this space. So maybe would you lift the veil a bit on how do you talk to other families about this? What are the questions you often get? What are the things you'd wish you were talking more about?
Yeah, so in the past years, I have talked to, I would say, a lot of other families, and also asked them on how they invest and why they invest the way they do, how the structure is set up, because most wealthy families have external people managing the money, whether it's a private bank or a family office or a multifamily office. But I mean, if a fact is that families in Germany, or families also worldwide, hold more and more wealth proportionate to global wealth in total. So there's a big mass of capital that we can use for either very good things or things that just focus on return. And when I talk to other families, what I often hear is, of course, it's managed by other people. And then the challenge is, if you, as a very motivated next gen, go to your family officer and say, hey, I want to invest my money differently. What can you offer me? What options do I have? What can I change in my portfolio that it's more sustainable, that it focuses on other things than just returns? Then most family offices and banks and or consultants, they say, I don't know.
Yeah.
That's not my job. My job is to give you the returns, stable returns. And what I know is ABCD, but it's for 90%, it's not impact investing. It's been very frustrating, actually, to also speak to a lot of multifamily offices and wealth management companies, because they say, we don't really focus on that because it's not our business model. Our business model is to make money, to get a proportion of that, because if we downsize, if we say we invest for no return or for flat return or for like more philanthropic reasons, then there's no money in it for us in the traditional business model. And I think we need a mindset shift there, because there's more demand. But then again, of course, you're often held back, because if there's no one there that can advise you properly, it's like you have a disease and you go to a doctor and the doctor just says, I don't know. Then you like, what do, right? You don't really know what to do. You can go to another doctor, but if everyone's telling you the same thing, you just somehow stop looking. And I think that's what we have right now currently, oftentimes, that they don't know where and how to turn to. And then there's a few very specialized boutique firms, sometimes quite an unfortunate combination coming out of the philanthropic world, where they don't really have the expertise in impact investing or really venture impact investing, but rather philanthropic. And then they seem too unprofessional, but more philanthropically like capable. And then you have the likes of, let's say, Goldman Sachs, UBS, Credit Suisse, Deutsche Bank, who come from the very other side, and they're starting to just think about, oh, do we need to add this to our portfolio? But when they sell it, it doesn't come across as authentic. So oftentimes they come across more, sometimes too arrogant, not understanding what the next generation really wants. And then they stop talking to them too. So it's a transition right now that is happening. And I hope I can inspire more families to find people that can do this professionally for them and with them in a way that really fulfills them too, and also their expectations.
Do you know the team Carbon Equity?
Yes.
I imagine that it's a bit up their alley, right? Because I think they work quite closely with some families.
Yeah, and from like the business model is, as I understand, is that they invest in funds and that you can start investing through them in different impact funds. Definitely a great step and also a great addition to this ecosystem. I think sometimes families need more than just the venture asset class, and also a nudge and more
Yes.
help
Okay.
in the whole conversation, like the more conversation, more like along the whole entire journey, that someone is there to help them how to navigate this.
It's pretty interesting. You're on a podcast. You're asking for an MFO to be formed for impact, right? Or an advisory business within impact investing. That's quite interesting. And you're saying so because, as someone actively deploying in this space, you haven't really seen it out there.
There are a few firms that do that increasingly now, but still too little. Like, because most families do, of course, have their established family office, private bank, established institutions that have worked with them for years, and it's difficult, of course, to change that and to
No. It's difficult for a whole host of reasons. I'm curious to ask you. So I'm just trying to demystify the family office space a little bit for people here. The dialogue that you have with other families within this, where does that dialogue often arise? Are there networks that are powerful and good, or is it just existing connections family to family? How does that work?
I think it's a little bit of a snowball mechanism, that you know 2-3 people and then are referred to the next 2-3. You meet people at events or at gatherings. But we also notice that in no established family business network, the topic of impact investing across all asset classes is actually a big one, so to say. With a few other next gens, we've been doing our own events where we invite next gens and great speakers who tell the round what they're doing or how they have experienced their own journey to impact investing, or their responsibility for the company or their wealth. And I hope that the established networks also or introduce the topic of impact investing more and more into their events as well.
How much of this happens in? So I've written a book on together with actually my former mentor on the soft issues in family business succession. And in the family business network in Denmark, a whole subgroup was built around family offices, to help the families establish new family offices. is that also the structure in Germany that you see, that it's run typically through a family business ownership group, and then this is where these conversations start? Or are there also good networks for family offices? Because it's two different things. Are you tied together because you own a business, or are you tied together because you have amassed a large amount of wealth and then you have a family office, right? It's two very different things. So my question is, in these networks, and I don't know if you know this, but are the networks in Germany oftentimes built around the family offices, or are they built around the family business ownership?
Family business ownership.
Yeah, and that is interesting, right? Because a lot of GPs think family office, but when there are networks that you want to understand, it's oftentimes the family business ownership networks.
Maybe it is half also. I think from my network, I feel it is more on family business ownership, but of course it's also just the bubble that I am in, and it could also be different.
No, but I do think you're correct, actually. I'd also love to ask you, now you run the impact venture arm of the family office. How do you interact with the principal and the family and the arm that then owns the business, so to say, the construction business and so on? Asking partly out of curiosity, but also to show the breadth of the role that someone like you are in.
So for Aurum Impact, I have regular interactions with the family officer and one of the brothers. So we're investment committee of 4, so 2 brothers, the family officer, and I. That's for all investments of Aurum Impact. We also then have regular interactions with the person responsible for venture investments that are more strategic nature, jointly with the family officer and the family as well. Just, I think, for exchange and interactions of that, this person sees what I'm doing, and I'm seeing also what the overall Goldbeck universe is investing in, and can add my 2 cents to it if needed and if wanted. Then, of course, there are a lot of other assets that the Goldbeck family holds, and a lot of other activities that they're engaged in, where I'm less involved. But naturally, I have a lot on my plate with my own team and investments. So it's run basically as a pretty independent unit. Same actually as Indigo. So the Goldbeck family also has a real estate investment company called Indigo, based in Düsseldorf. There are 12 people. They're also, I think they started around 10, 15 years ago. And in the beginning, they were a little bit, from what I heard, more closely knit together with the Goldbeck company as well. But naturally, as they grew and did their own investments, their own activities, they're very independent own unit.
I love this space because everything is so different from one place to another. I know you have blueprint for impact investing. I'd love to ask you to tell us a bit about that.
During the strategy process, we've established something that my team now calls the onion. So basically, we looked at every layer in the impact investing ecosystems. So from talents to startups to entire portfolios, venture capital firms, LPs, and ecosystem. And we looked at the challenges and what we thought should be or could be improved on how to get more capital into the impact investing ecosystem, and what the challenges and the problems are that this whole ecosystem actually grows more and finds more investments, basically. And for each layer, we have then developed goals and actions where we want to become active and how we can drive change and improve things. So, for example, we've seen a lot of climate tech startups now that work on carbon emission reduction technologies, but we don't see a lot of social startups right now. So we looked at the ecosystem and said, how can we engage? What can we do? Of course, we can try to invest in more companies, but if there are none, it's quite difficult. So we said, let's find and also support an initiative that aims to bring out more startups in the social impact ecosystem. And the Unternehmertum, so the entrepreneurship center here in Munich, they've just started a new initiative called the Social Impact Republic, where they want to develop and grow and scale impact unicorns, and we're a member of that, for example. And then on the other hand, we see that every LP, very different layer now, has very different criteria on what makes a good impact fund. So we talked to the big investors like EIF and KfW and other LPs and said, hey, how can we get together and streamline the impact VC investment process and see what criteria we have to make it a little bit easier for GPs to get funding and know what they have to fulfill if they want to be seen as a good impact fund. So we're working on that also with these actors. Very different layers and different activities. We try to move things a little bit in every onion layer.
Now that you think about the ecosystems here and the layers and how you can impact, how much are you thinking Europe and how much are you thinking Germany?
I think most of what we do is thinking Europe, or not globally, that would be too much, but we like have some interactions with American funds as well, but most would be Europe, actually, not Germany.
We never spoke about this in the beginning, but the scale of your AUM or budget allocated or remit, what is that?
What we always say is we want to invest in 4 or 5 companies per year, pre-seed, seed, Series A, and we want to invest in 4 or 5 funds where tickets can be between 1 and 5 million, let's say, or 1 and 10 million. Everyone can do the math and then him or herself.
How do you organize yourself? Just to understand that, so now people know how many investments you're planning to do. How big is then an impact office or an impact venture office that is capable of doing this? You and what team?
We have a team of 5 now, so 2 people in Munich and 2 people in Berlin, plus me. And we have help from the asset management team that sits in Bielefeld. I think that's a very important support function, and we couldn't do it without them. Definitely, so that helps a lot. And of course, also we get support from the broader Goldbeck ecosystem, whether it's HR, recruiting, or payroll, IT, things like that. So that helps enormously.
Before we close, because we are getting to that time, I want to ask you just to give some best practices advice for VCs that look to raise from family offices.
I think the first thing definitely is know your LP. So get to know your LP and know what drives the LP to invest in a VC fund. I would also advise get to know them beyond fundraising, better before you start fundraising. So work on something together, whether it's a publication, a project, an event, a deal, share deals if they're also doing direct investments, because that's the best way of getting to know someone to work on a deal. Then
and maybe before you go to the third, a good point here. Am I right in saying that, because some GPs might think, well, how do I get a family office to want to do that? Am I right in saying that if you can't cross that boundary, the likelihood that you can get an investment is not very high either?
Probably I can't speak for all. It's different for every family, but I think it's definitely of an advantage if you can get to a family member or someone who works for the family in a setting that doesn't involve fundraising directly. I think if you start off with your pitch right away without any context, it'll be very hard unless you have some stellar, very unique USP. And it brings me to my third point. We looked at 160 funds in the past 2 years, and we found it very hard oftentimes to find a USP. There are a lot of funds that seem quite similar, whether it's investment focus areas, geography, stage, why they think they can win, then they say they have some co-investments here and there, but it oftentimes felt very similar. So I think what is good is to have a really good USP. What makes you unique, whether it's your team or your connection to Unternehmertum, your proprietary accelerator program, or anything that you can offer, I think is important. And then last, I think it takes a very long time to prepare fund or fundraising. And I think I would really take the time to build up your team, your reputation, a brand, a track record. It takes time and money to do that, but I think in the end, then you'll be probably more successful with fundraising if you've thought about all these things for a little bit of a longer time. Because sometimes I see teams and think, why do they think in this fundraising environment that they can raise a fund? It's really tough, and there's so many funds out there. It's incredible. So maybe these 4 points. And for us, of course, a very good and solid impact and ESG framework is important. Also, we try to look closely at diversity as well, because we do have an issue in the venture scene when it comes to diversity as well. So yeah, these are the things I think.
I want to drill a little bit into what you said here with the lack of USP or lack of like that confounding moment where you're looking at a VC thinking, why do you think you can raise in this environment? Could you be specific? And I'll jump in as well, so you're not the only one spilling the beans here. But what are the things that, you know, when you're seeing it, you're thinking, you're not there yet? Why? Like,
for example, I had a fund that had 3 GPs, and 2 GPs had not done any deal before. So that is a little bit difficult. I think if you're 4 GPs and one of the GPs has not done any deal before, it's a different thing. And that GP then has something unique that he or she brings to the table, whether it's a industry expertise or topical expertise. But if the majority of GPs has not done any deals, I think it's difficult. Then if you invest in deep tech, mostly hardware models, if that's your goal, and none of your team has any deep tech or hardware experience or expertise, whether it's from your university background or also the company or whatever you did before, then it's also, I feel, a little bit difficult. What about in your experience? Because you also wanted to spill beans.
Yeah. So let me say how I think about funds, right? We are coming out with an article that's called the Elusive VC Edge, and we kind of preface it by saying that many LPs will ask you as a GP, what's your edge or your USP, as you described it? And many LPs honestly will not know what they're asking. They know that they expect an answer about different competitive strengths, but they don't know exactly what they would like to see, what they think is the right answer for the GP to come up with, which makes it very difficult to evaluate correctly. So LP, a lot of responsibility there on our LPs in the ecosystem as well when it comes to sophistication. But on the GP side, you'll also see tons of different answers to the question, what's your edge? And I do think that it is correct that there are a ton of different answers based on what you're investing in and so on. But I do think that there is a framework to it. What I'm saying is that we have, I think I say that it's 7 questions that you have this need to have unique empathy for the founders that you're investing in and the situation that they're in, the journey that they're on. Typically, that is at least a team member having an operational background from the sector, stuff like that. As you said, if you're investing in deep tech, haven't been on a deep tech journey, that gets tough. Then next question, how many reps have you done? Meaning how many repetitions have you done within this market? Here comes track record as well, but it's also about, have you managed money on behalf of others? Because that's part of being a VC firm. Because you might have angel background, but if you have never managed other people's capital, never raised capital from others, which is also an important part of running a successful VC business, you might have a difficult time, right? Same thing when it comes to delivering value to founders. Like I saw a team the other day that had a great idea about how they would bring frameworks to founders and they would develop these. And I was like, well, most founders that are successful don't need your frameworks. And if you don't already have them, but you're kind of like developing them, I don't really see us having done enough reps, because you should have those on your backbone ready to go. Then I say the distribution flywheel is incredibly important in venture, because everything in venture is about being able to access LPs, founders, customers. And because you're inherently on a small budget as a VC firm, when you're starting out especially, you really have to have everything working perfectly in unison. And then that's a bit back to the reps, right? Because if you've just come up with the idea and thesis and so on, you typically will not be able to say, this is how every little thing in my ecosystem interlocks. And that is just where I think you can see a lot of first-time managers, the difference between someone who's ready to be a first-time manager and someone who's not. Because yes, you want to have this in place. Then there's the arena you play in and the players that are in that arena. It's vastly different whether you are a vertically focused VC in a small market or you're a agnostic VC trying to win in all of Europe. And it's perfectly all right to do a pan-European vertically agnostic fund if you have 4 people spinning out of the top firms and you've deployed billions of capital and you have the best networks across Europe. But oftentimes you see that strategy pursued by people where you're like, that's not very convincing. Why would you ever? For me, in the seed stage, Seedcamp is really a fund that's done incredible work and scours the whole market. Why would a founder go for your money versus Seedcamp's? If you can't tell me that very convincingly, why would I put my money with you versus Seedcamp? And yes, Seedcamp are hard to get into. You have to build a relationship and so on. But there are quite a few funds like Seedcamp where as an LP, it's not difficult to deploy capital and get access to European VC funds. The top echelon are oversubscribed and difficult, but there are still very competitive, great funds that aren't. And then I think that there's the whole game of being able to generate liquidity and understanding the basics of portfolio construction and portfolio management. That is something where I think you definitely see some VCs not being as sophisticated as you would hope. This is where I'm saying, these are my questions to a VC that I want to see answered when I ask, what's your edge, right? And I want to see them, if you then only have 30 seconds, they should know, okay, where do I focus my time here? What is the core thing? But if you have 30 minutes, you actually have time to cover all of this. You don't have to spend the 30 minutes talking a bit east and west and deep dive on the vertical and so on. Because I'm typically bought in on most verticals. There's not a lot of verticals that I don't buy into being investable. What I really want to understand is your firm, because it's your firm I'm investing in. You know, coming back to the reps and all this, for you investing in impact, right? And so reps is also a lot about processes. And if you don't have good processes in place to track impact measurement, that's something for you where you're like, I don't feel comfortable doing this because I'm here for impact. So now we closed on a long rant from Andreas.
No, but very interesting to hear your perspective as well, because you've talked to so many VCs and GPs. So it's very interesting to hear yours as well.
Yeah, we've invested. So we've also invested. You probably don't know that we've invested in 12 funds. My co-founder and I. Okay. We do it as a syndicate. So it's a bit of a different model. But I do think that if you want to, with integrity, be in the VC space, you need to be deploying and you need to be in the arena. Yeah. Miki, thank you so much for coming on the podcast. This was fun.
It was a delight to be here. Thank you for your good questions. And I look forward to hearing the episode.
Before I let you go, I do want to say you deserve huge respect for wanting to champion the mission of investing in venture and investing in impact in Europe. I think it's hugely commendable that you and the team are doing it and trying to get more people involved. It's why we started the podcast back in days. It's why we do everything we do. So thank you so much for doing that work.
Thank you for having me.
Here's a few words from our beloved sponsor. Discover where operational expertise meets innovation. With end-to-end coverage across fund admin, tax, accounting, compliance, ESG, and more, we take care of the complexities so you can focus on what matters most. Whether it's supporting visionaries or maximizing returns for your LPs, our tech-driven and comprehensive solutions empower you to achieve your goals with confidence. Partner with Ace Alternatives to streamline your operations and elevate your fund's success.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting. Acting.